Hello, everyone. My name is Robin Dolezal. Today is Monday, April 18th. With me, as always, are my good friends Alex Pars and Dan Nentel. Let's see. Good afternoon. How are you guys? I had to double check. I wasn't sure if it was still morning or afternoon. Just crossed the line. Well, hey, happy tax day, gentlemen.
Yeah.
What a fun day, huh?
Yeah, they said they've got 96% of applications this year have been done electronically. So
Okay.
they're finally getting that message across.
Yeah, that's
They've been
great.
pretty happy about that.
Those are good numbers.
Is there still a big leg for those people getting refunds? And I heard because the lack of employees or that there was going to take forever to get your refund. Is that possible?
I did see a big, so I don't remember the numbers, but I did see something like 21 million, applications are delayed or something like that. So,
Dan, I didn't pay attention to that number because I was not in that group.
no tax refund this year.
Well,
Huh?
happy belated Easter to you both. And Alex, did you do anything exciting yesterday with the kiddos? Or
No, we went over to Grandma and Grandpa's and colored Easter eggs and tried to find them. And
Yeah.
It's amazing how hard a bright pink egg is to find when it's sitting on a windowsill.
Okay. Well, that being said, as you know,
Alex and I will sometimes get the families together. What is that game called that you introduced us to where you tap the eggs?
Oh, just an egg cracking contest.
Egg cracking yeah.
Yeah. Grandma won this year.
Okay, good. And Dano, you're a very social guy and always have family. Did you have family over, or was it quiet for you? What'd you do?
yeah, had my sister and brother-in-law in town, and my brother and my mom came over, and we had a nice little brunch.
Oh, good.
And you're laughing about your young children not finding an Easter egg. My late teens kids that my wife hid Easter baskets again, and we had to do the hot and cold game. They are so horrible at finding things.
I have to play that daily. My wife will say, "Can you go to the fridge and go grab me that?" And I said, "It's not in there. I checked all over." And she said, "Did you check where I told you?" I said, "Yeah." And then she'll grab it and say, "It's right there." So I'm just as bad. Well, I was in San Francisco.
Oh.
Well, yesterday for Easter, I was literally traveling all day. But last week, my kiddos anyway, don't have spring break. They get Easter break. So we spent some time and went and visited my brother in San Francisco area. So that was fun.
Cool.
Sounds fun.
Yeah. Anyway, well, let's get to it. I know that I have a feeling I know the answer to this, Dano, but anything happening in the market since we last chatted about a month ago?
Well, so you say that kind of tongue in cheek because the markets are exactly where they were as far as S&P being down. Well, what did you tell me earlier? About 8, 7.5. Nasdaq's down about 15, which is ironically enough exactly where they were a month ago. However, I think the broken record for the last few years, and not to take any of Alex's talking points, but so what happened the last month? Right before we talked, the Fed spoke and said, as we've always mentioned, the Fed's been very consistent. They said we're going to raise interest rates this year, and the market was super happy. It went up. At one point, the S&P was only down maybe 2.5%, and the Nasdaq was down about 10. And then we got to the point where we got the inflation numbers, and people got afraid, and there's now some rumors that the Fed's going to do some pretty dynamic quantitative tapering that we'll let Alex talk about exactly what that means. But so the market then pulled back down to where it was exactly 1 month ago, and the Fed will speak in a couple of weeks, and we'll see what becomes of that. I think we have an idea. They're talking about a pretty big number of trying to decrease the balance sheet. But how does that affect the market? Well, that's probably the $1 million question. And in that situation, realize that by raising interest rates, we're seeing a few different things. It slows down the economy. Alex told me this morning, I was kind of shocked. Mortgage rates, which were literally a year ago, 2.5%, are now north of 5% if you're trying to get a mortgage. And what does that mean? Well, that also means that your safe investments are paying more. So Alex and I were looking, I think we were on the Schwab platform looking at current yields for treasuries. And this is about 3 weeks ago before the Fed spoke, and you could get a 1-year treasury that was paying about 0.5%, 50 basis points. I just looked a few minutes ago, and it's north of 1.5%. So now if you think about that, that's a pretty huge increase on a 1-year safest investment in the world scenario on it, CD, if you will, issued by the Treasury. So the market's really pricing in the idea that interest rates are going up, and that's what's driving everything, right? So inflation is horrible. That really affects the retirees, with the majority of people that are retired living on Social Security. The Fed has to do something about it. The way to combat it is you raise interest rates, what the market doesn't like, because that drives up safer investments. And now maybe there's an alternative to the investment idea. The last two things I'll share with you, and then we'll move on to what the Fed's doing economically, and other points that Alex may have is realize this. When we go back and look at, you're hearing a lot of comparisons to hyperinflation, price 76 to 82, and realize the stock market did all right during those times. Because remember, the stock market is designed to buy companies that are profitable. And if you're profitable, you might sell something. And if you sell something, you have customers. And if you have customers, what do you do with you have inflation? You oftentimes will pass that on, and your company is equally as profitable as pre-high inflationary numbers. I mean, I went the other day, my son and I, we were running late for ran early for a baseball practice. We decided to stop at a little breakfast joint around the corner from our office. And I got a plain omelet, nothing else, a cup of coffee, and my share for that 3-egg omelet was $17. So guess what? That little place right around the corner is passing on its increased prices to me. And that's exactly what happens with Wall Street. The stock market history tells us is an inflation hedge, far better than gold or silver or crypto, et cetera. But you have to have somebody that makes a product, which is why you're seeing, I mean, the markets were down this morning and then they flip right back up, except for the technology sector. Why? Technology doesn't usually they're not able to pass the inflationary numbers on to their customers. So we're going to flow with the Fed. The Fed will talk here in a couple of weeks. We just had an investment policy meeting, as we have multiple times a week. And we've kind of come up with the idea that the Fed will probably give us exactly what we're thinking. We'll probably see a nice little rally, but this time we can actually sell some stocks and buy some bonds that are somewhat attractive. So maybe get a little bit more conservatives here with the next rally. Again, well, it depends on what the Fed says. But anyway, a lot of mumbo jumbo there to say the market hasn't moved in a month, Robin.
Yeah, I appreciate it. So did you charge your son for his share of the breakfast? That's what I wanted to know.
But I'll tell you what, he got a hot chocolate and had a couple eggs and had one pancake, but our meal was over $31 for 2 people. I mean, it was pretty nuts.
Breakfast, it's expensive.
Yeah. All right, Alex. So any surprises from the Fed since our last meeting? Or are they doing exactly what we thought, or what are your thoughts?
The only surprise that I've seen is, at the last meeting, they said, we'll talk about quantitative tightening or letting the bonds mature off their balance sheet at the May meeting. They've made some comments in the meantime that they're thinking maybe they'll do $95 billion a month, which is huge. That's way more than they talked about or ever did last time. And it's frankly faster than I was expecting them to do. Now, that being said, that is not a decision. That's an indication of what might be a decision. So we'll see where the actual number comes in. The good thing to know is they are nimble. So if they start that and inflation, falls through the floor and the economy starts to suffer, they can always slow that down very quickly. Again, $95 billion a month is just under 1.2 trillion a year of their $9 trillion balance sheet. So while it's a lot of money, it's still not a lot of money. Mm-hmm. So probably more of interest is going to see how these rising prices affect purchases and inflation in that way. So, auto dealers like CarMax and AutoNation have said slowing sales significantly due to higher prices and rising interest rates. Again, I can't imagine mortgages, being at over 5% hasn't slowed the mortgage applications and home purchasing. So I think we'll see some of this frenzy of, oh my gosh, gotta buy it now, and I can buy it for practically nothing. Interest-wise, that's going to go away. That's going to help the inflation issue. So those people who are worried about inflation, talking about, oh my gosh, it's going to be horrible for years, I think it's going to settle down pretty darn quickly with these moves that they're making.
So define your quickly.
Well, the 3-year inflation expectation average, including what's going on in the next 12 months, is just over 3%. So, if you put in a 6 or an 8 for this year, and then an average for 3 years of 3, you pretty much have nothing left. Yeah. So they're expecting to get a handle on this very quickly. And I wouldn't be surprised if they do. I mean, again, the prices have become kind of insane and it's harder to get them. The free money stopped. There's a really fun story, well, fun depending on which side you're on. Somebody bought an NFT, I think it was either last year or in January, for $3 million. Okay. NFT, non-fungible token, means literally it's the rights to a tweet. Okay. So you can look this tweet up on the internet and you can look at it and, you just can't call it yours unless you own this NFT. Then you can say it's mine. I don't know what else you can do with it, but you can say it's yours. So this guy bought it and he intended to sell it for 48 million, having bought it for 3, and generously offered to give half the proceeds to charity. That's very nice of him. Unfortunately, as it stands right now, I think the bidding ended at $18,000. So this is a $3 million NFT from not too long ago, is now being auctioned at about 18,000. I don't think he's planning on selling. Maybe the market will rebound.
Right.
But that goes to show the really silly stuff like Dan was talking about: no product, no customers, no profits, with no free money. That stuff really stands to risk and could fall hard.
Yeah.
So that's what we're worried about this year, is all those overpriced stocks really dragging the rest of the market down. The value side's doing fine. Things like oil companies that, as Dan were talking about, are raising prices on their existing clients and maintaining their profit margins, are doing okay, or certainly better than the companies that have never produced whatever widget they plan to sell someday.
Yeah. So for those who are watching, or there are one fan watching today, if they aren't paying attention to inflation numbers, what is the latest inflation numbers?
I think it was about 8.5 annualized, and more scarily, it was 1.2 on a monthly basis for March, which puts you at about 15 for annualized if you would have the same number over and over. Again, I don't think that'll happen, but that's a scary thought.
Yeah, that really is.
15% inflation. Home prices, 19% year over year.
Yeah.
Rent prices, I think, are closer to 25, and they're expecting, I think, another 10 this year, and then subsequent 5% increases for the next few years. So those people who don't own assets, don't own a home, could be in real trouble in the next few years as inflation does bite them, and that's catching up to this big boom in prices that have already happened.
Yeah.
And to that,
go ahead, Daniel.
just to that, mentioning what Alex is talking about having customers having profits. If you look at an equity style box and you include Europe, right? So you have your large caps, your mid caps, your small caps, throw in international. And then remember, we'll split it. You have the value side, the blend side, and the growth side. The large growth is tech, right? That's Apple, Amazon, Facebook, Microsoft, Google, etc. If you look at those 9 boxes and then include international, the only sector that's up year to date is the dividend side, or the large values of the S&P 500. So about 200 companies that build up that one sector. It's the only sector of the 10 that's up. And why is it up? They pay dividends, they have profits, they can pass inflationary numbers out to their customers. So they're actually doing quite well. The other aspect of that, as Alex just touched on, they weren't over purchased last year with the free money. And so now they weren't overpriced to have this fall. When you look at the NASDAQ, and I'm sorry, Alex, to put you on the spot here, any idea what the NASDAQ is times earnings right now?
I have to look it up. I know it was 40 at the beginning of the year, then it dropped to about 33, or 30. So I want to say it's probably 35-ish.
Gotcha. So still smidgen overpriced still.
Yeah, I mean, particularly for the promise of future profits that are being discounted now at 8.5% per year. So, you have $100 today or $100 10 years from now. If inflation is 0, you don't super care. But if inflation is 9% per year, that money's not worth hardly anything by the time you get it.
Right.
And that's where the prices in the NASDAQ really can be hurt. These people who someday are going to disrupt the industry and take over. Well, maybe they will, but that's $100 10 years from now, not $100 today.
It's a great way to explain it.
Yeah. So anyway, any other thoughts, Robin?
No, I don't think so. I just was, I'm kind of bummed about those mortgage rates, that they happen so quick. Oh my gosh.
I was talking to a client last week, and he just bought a home, and he says, I'm going to put my home up for sale in a couple of weeks. And his realtor said, no, you're not. You're putting it up for sale now.
Yeah.
Because we don't know, what's gonna happen in 2 weeks. People want to lock in today's mortgage rates before they get to 5 or whatever.
Yeah.
And so hopefully he was able to sell that. So,
It'll be interesting to see what our Tucson market does compared to the national market.
I just looked at the statistics this morning, and we're lower supply, days on market hasn't changed. I mean, it's looking hotter than ever, basically. And that was March.
Yeah.
Fewer homes coming up, fewer homes being sold, less inventory, 0.8 months, basically. So next few months, I think it will
Yeah,
settle.
obviously the interest rate hurdle, but other than that, Tucson still got very low inventory, so
Yeah.
that could help boost home prices.
Yep.
Well, guys, I appreciate it as always. I know you got things to do. We will do this again, and we'll call it a few weeks or a month or whatever. But I hope you guys have a great rest of the week. Folks, if you have any questions that we did not address, please don't hesitate to reach out to us. If you are not a client and you'd like to talk to us, you can find us at ironwoodfinancial.com or reach us toll free 888-271-4646. Other than that, we will see you next time. Enjoy the rest of your week.
Take care.
See you guys.